Wonderful good day, ladies and gentlemen. Good morning out of our studios here in Munich. It's commodity TV time. And as you can see, we guys are already dressed up, ready for Oktoberfest, but still in the morning. There's a long way to go with work. But in the afternoon, I show the guys around at the Oktoberfest. We will have maybe 1 or 2 beers. So, today we have Timmins Gold here. You know, the very successful Mexican gold producer, or actually I should say the Canadian company producing gold in Mexico. And with me here is Bruce Bragagnolo. He's the CEO of the company. Bruce, great to have you here, and I love the outfit.
Hey, it's a pleasure to be here, especially in Oktoberfest.
Great, yeah, absolutely. Well, you choose the right time, I would say.
Yes.
Timmins Gold. Gold at $1,200, a nightmare for a lot of companies, but thank God, not for you. How was the last 2 quarters? I'm sure you had a tough time, but you still make some money, right?
We did. Last quarter, we had $11 million in earnings, despite the declining gold price. And we've run our costs, and we're good down to about $1,000 gold. That's our break-even point. So even in an environment like this, we can still continue to make money.
Great. What are the plans for the San Francisco mine? You want to raise the production. You produced something like 125,000 ounces, right, last year. But what is the guidance for this year?
The guidance for this year is between 115 and 125,000 ounces.
Yeah.
And the challenge for us now that we've built the mine out to specification, the challenge is to see how we can expand our production. We've got a few things we're looking at. One thing we're looking at is increasing the capacity of our crushers, and we should have that completed by the end of the year if we proceed. The second thing we're looking at is another scenario for underneath the pit. We found when we remodeled all of our data that there's a higher grade zone underneath the pit. And we're looking at ways to mine that and also bring that into our reserves. That could be a substantial, that could bring about a substantial improvement in our net present value. And as well, we're exploring. The best thing we can do is find a second or third San Francisco mine by exploring out in the desert around the mine. And that's what we're working on right now. We found very similar rocks to the San Francisco mine. We found targets of similar size to San Francisco. So we've got our fingers crossed right now as we drill.
So let's come to the exploration side a little bit, because you already started with that. When you say around the mine, I know you have 200,000 hectares land, so that's a really pretty piece, large piece of land. Have you started already some drilling, or what are the plans for that, to maybe create a second mine? Hopefully?
Yeah, we've been drilling since June, and we started out with scout drilling using small drills down to 50 meters. And then as a result of that, and as a result of just simple prospecting, taking samples from the ground, we found 2 zones that we're now drilling with bigger drills. We've got 2 core drills and 2 reverse circulation drills working on one target, which is 2 kilometers from the mine, and a second target, which is 4 kilometers from the mine. So we're drilling extensively there right now. If we're successful with those drills, we might bring in some more drills later on.
How many meters do you think you have to drill until you can make a decision, hopefully successfully after the assaying, that you build a second mine, and how much money would it cost? Just an estimate, of course. I know you cannot say it in full numbers, but just a guess that our viewers get an idea about.
Yeah, we have the San Francisco mine as a comparison. At the San Francisco mine, it took about 50,000 meters of drilling to get 500,000 ounces. 500,000 ounces in resources would give us enough information to make a decision about production. So we're hoping to find another 500,000 ounces as a starter in satellite deposits around the San Francisco mine.
Great. Time frame for that?
Well, it takes a little while. It's going to depend on the budget. This year we had a $5 million budget for about 35,000 meters. So if we're successful with this program, we probably continue next year with $5 to $10 million. $5 million would get us 50,000 meters of drilling.
And of course you finance everything out of the cash flow, that's for sure, as you make money.
That's right, yes.
Yeah, great.
That's always been our plan.
Yeah.
If you look back to 2007, the plan as we mapped it out was to take the mine to production and use the cash flow from production to explore and find other mines in the district. That's why we have 200,000 hectares. We're very excited about this land package, and only now are we able to give it the time and the drilling that it requires.
Okay. Coming to a bit of the financial stuff, because that's also important for the people. I said gold is at 1200. What or can you do some measurements? Let's say if gold drops to 1100 or even 1050, Goldman Sachs predicted. Can you still pull some screws that you, can survive the thing easily? That you can say, okay, then we stop exploration, for example, or we do this and that we can for certain amount of time, we can bring down the cost substantially. It may not make sense for the overall company, but just to survive the thing.
Well, the best thing you can have in a volatile commodity sector like this is a strong balance sheet. We've got $56 million in cash at the end of last quarter. We should add some cash this quarter. We can cut all of our other programs like drilling. I'd rather not. I'd rather spend the money on the drilling because it has been going well. So I would rather just continue ride out a rough period using our balance sheet. However, we might get to a point which we're not making money anymore, and at that point we'd have to reconsider all of our operations. We are right now challenging our contractors and our suppliers to reduce their costs, and it's difficult, but we continue to challenge them to get our costs down. We've been very successful in getting our costs down. Actually, adding more tonnage to our throughput would help our costs, so we could spread our fixed costs over more tons. But we're definitely trying to get our costs down as much as possible.
Great. So we shouldn't worry about you. Definitely not. No,
well, it makes for an easier sleep at night when you have $56 million in the bank.
Definitely. And I think also I read in your presentation, you have $13 million in debt, but you pay it back by end of the year, right?
That's right. The plan is to pay that back by the end of the year.
So that means by 2015 you are debt-free.
Debt-free, that's right.
Wow, that's sensational. Great.
Yeah.
Short-term plans, let's say next 6 to 9 months? What do you want to accelerate, or are there any special things you want to achieve?
Well, it's tough to accelerate too much right now given the current price environment. But we did have basically a new board come in this summer, and the new board has asked management to give them all of the opportunities to look at our own operations, to look at potential for M&A, and also to look at what we would look like as a target for a purchase, somebody else acquiring us. So all the options are open right now. We're considering everything.
I presume on a higher price if you would be acquired.
Well, always.
Yeah. Fantastic. Well, Bruce, then for that, all the best. And thank you very much for the update. And we look forward to have you soon again here.
Yeah, thank you. And thanks for the Oktoberfest edition.
Yes. Welcome. I love it. I look forward to it, actually. Ladies and gentlemen, that was Bruce Bragagnolo, the CEO of Timmins Gold. Well, you heard it. For the right price, the company is for sale. I don't hope so, because the guys did a fantastic job so far, and I think it's one of the most successful operations in the last 6-7 years. They can squeeze the costs down, so there shouldn't be a problem, even if gold goes to 1100 or 1000. They still make some money and they can survive. You heard it, healthy balance sheet, over 60 million then by the end of the quarter in the bank, and they will pay all the debt back by year end. So fantastic company, they do well, it's substantial and it's quality. Have a look on it. Thanks and bye-bye from Munich.